I'd like to call this meeting to order. This is the June 24th, 2014 meeting of the Board of the School Authority Board of Directors. We have a special presenter this evening, Liz Bush, who is representing our auditing firm, Bowers and Company. And we'd like to give her the first opportunity to do any of the conversing with what's at the tables. Be useful, as we've done in the past, for you to identify yourselves just for the record on camera.
Dave Skirner.
Ken Stevens.
Herb Coates.
Mike Carroll.
Sherry Brown.
John Harris Smith.
Tom Gillen.
Mike Shanley.
Terry Hamill, and at the other end of the table, Liz Bush, whose tonality was stomped on momentarily. Okay, we're gonna change our agenda a little bit tonight, and ask Liz to make the presentation first, so she doesn't have to sit through other discussions, wasting her time. So Liz, would like to turn this over to you.
Okay. I'm Liz Bush. I'm the audit partner from Bowers and Company from our Watertown office, and I came down to the port a week ago and met with the audit committee, and we went over the financial statements very extensively. So tonight I'm going to give you the financial highlights from your audited financial statements. Please stop me along any point in time that you have any questions, and I'm more than happy to answer them. So with the audited financial statements, the first report is the independent auditor's report, and we issued an unmodified or a clean opinion on your financial statements. On page 4, we have the management's discussion and analysis. This is required supplementary information from the Governmental Accounting Standards Board. This is the opportunity for management to provide some information about their condensed financial statements. I won't review these statements here because we're going to look at them in further detail when we go to the actual statements on page 9. But this is an opportunity on pages 7 and 8 for Zelco to provide some background information on the operations for the port this year. So then over on page 9, we have the statements of net position. This is the balance sheet for the port. And it's a comparative statement. This year we've had current assets decrease roughly by $328,000 or about 28%. Part of that was due to the decrease in accounts receivable of about $200,000 or 34%. There was a slight decrease in cash of about $80,000, and the grants receivable were down. We did have an increase in prepaid expenses for some recruiting fees. One of the biggest changes that we found on the asset side of your statement of net position was the increase in capital assets. Capital assets increased $1.2 million this year, and that was attributed to the purchase of the Mitchell property and the Cayuga Street property. So overall, your assets increased by $800,000 or 7% this year. Over on the liability side of the statement of net position, we did see an increase in current liabilities of about 22%. A significant portion of that was due to accounts payable of about $48,000 and also the accrued payroll-related charges. It had 2 months of pension-related charges in that particular accrued payroll. Net increase was about $40,000. We did see an increase in the line of credit as well during the year as compared to the prior year, of about $60,000. Down in the middle of the page under long-term debt, we saw an increase in long-term debt, which once again would be attributed to the purchase of both of the properties during the year. So that's why we see an increase of debt of about $950,000. The port does properly record their post-employment health care benefit, which is required by Governmental Accounting Standards Board, and this year that debt did increase about $30,000 and or about 3%. So overall, your liabilities increased $1.1 million or about 20%. Down below, we do have the net position. which used to be formerly called the net assets that changed last year. We do have the unrestricted portion is about negative $825,000, while the investment in the capital assets is $5.7 million. So your total net position is $4.8 million. On the next page, we're going to see the details of your statement of revenue and expenditures and change in net position. So over on page 11, as you can see, we had a slight increase in revenue this year in the operating revenue, about 2% or $98,000 this year. Down below in the operating expenses did increase about over $500,000 or 13%. What that's due to is an increase in salaries and wages. Salaries and wages did increase by $200,000 as compared to the previous year, or about 15%. A big portion of that was the longshoreman payroll, which increased about $140,000. Along with an increase in payroll, you would normally assume that you would see increases in payroll taxes and fringe benefits, which the port did see. A portion of that is always attributed to the rising cost of health insurance, and just the increase in salaries would drive the payroll taxes and other benefits. The employee retirement and pension expense, that did increase about $100,000 this year, or about 20%. A significant portion of that is due to the longshoreman's retirement expense. Also, insurance expense did increase about $90,000 this year. That's due to increase in premiums, which is driven by lost claims runs in the past few years, and just your increase in revenues. Further down the page, we did see an increase in contract trucking due to increase in revenues. So you ended up with a net operating loss of $806,000. However, down below, when we look down the loss, under the loss before capital contributions, the port had a $450,000 capital contribution, and that was with the purchase of the Mitchell Street property, where there was a non-cash contribution in relation to that sale. So that brought your change in net position down to about $300,000 loss this year. And over on page 12, you have the statements of cash flows. This statement just shows how your cash changed from the beginning of the year to the end of the year. And as I talked about a moment ago, it decreased by $80,000 during the year. Over on page 13, we have the notes to the financial statements. There weren't any real significant changes to your significant accounting policies. The only thing that changed this year was that you adopted GASB 65. It's instead of having deferred revenue for the marina reported as deferred revenue, it's now called a deferred inflow of resources. So you properly adopted that. That's on the bottom of page 16. On page 17, I would like to point out that your cash deposits were fully insured by the FDIC at March 31, 2013. And then we start the liability notes with the short-term notes payable. As I said a moment ago, it increased this year. So at the end of the year, it was $213,000 with some additions of about $68,000. Over on page 18, we have the long-term debt. We are required to disclose the long-term debt with the balance at the beginning of the year, any additions and payments, and the balance at the end of the year. As you can see at the top of that page, there was a significant amount of additions with the acquisition of both properties. Over on page 19, we have the detail to the long-term debt. And we disclose the debt with the various banks. And I do want to point out there were some loans with Pathfinder Bank that had a debt covenant ratio that was not met for the current year. However, the bank approved a waiver for that loan covenant. And then over on page 21, we disclose your estimated future maturities of your long-term debt, which is about a little over $5 million. And as you can see at the bottom of page 21, your debt will start decreasing after 2017. And then there's a large amount and thereafter, that is the amount of the New York State advance. That does not have a maturity date yet. And over on page 22, we disclose the information for the New York State retirement system. At the bottom of page 22, you can see the required contributions for the current year were $109,000. And last year, in 2013, they were about $93,000, so a small increase in that retirement amount. Over on page 23, we do, on note 8, we disclose the operating lease that the port leases out property. It's called property held for lease on your balance sheet. And then we disclose your future minimum rentals for the next 5 years and thereafter. So the port will see over $3 million through probably 2030 or 32. It's just based on all of the leases that are in place that you will expect to collect rent income over that period of time. And over on page 24, we also have to disclose the operating leases on the expense side in the middle of the page under note 9. As you can see, there's 3 leases that will expire in 2017. Note 10 is the post-employment healthcare benefit note, commonly referred to as OPEB. And that continues on for several pages. It's a very lengthy note. Over on page 25, we have the calculation. We're supposed to disclose that. This is prepared by an actuary. And what it is, it's the obligation that the port has to record. At the end of the year, it was 1.1 million. It increased about $30,000 this year. And that's the cost, the actuarial cost of the future benefits of providing health care benefits to the retirees of the port. And that note continues on page 26 with some details that we're required to disclose from that actuarial report. Over on page 27, we have the subsequent events. We did not have any subsequent events to report as of the date of this report. And then over on the next page, we have a landscape schedule, very similar to the debt note where we disclose the balances at the beginning of the year and the end of the year. We also disclose any additions to your capital assets and also to your property held for lease, and any retirements, which is typically your depreciation or any disposals. On the following page, there is a report on investment policy. This is more applicable to larger public authorities. Really, all of your money is held in checking, savings, or CDs. So we do report on this just to abide by the New York State regulations, but you don't have any investments per se. The next page is the another report. It's the Government Auditing Standards Report, commonly referred to as a Yellow Book report. And this report discloses whether we had any internal control findings or any compliance issues. Over on page 31, I do want to point out that the preparation of financial statements, you've heard me talk about this in the past. I know I've met with several of you before. What this is that at this particular time, the port does not have a person that's able to prepare these financial statements, including full footnote disclosure, and what happens is we prepare them. We can do that. However, we consider it a significant deficiency. You're small enough that at this point of time, I would not recommend going out and hiring an accounting firm to prepare the statements and then have Bowers come in and audit them. It just is not it doesn't make sense. The cost would outweigh the benefit. I was in a seminar all day today in Syracuse with governmental auditing standards, seminar with different governmental entities. And it was a large room of people. I had 2 people raise their hands and say they prepared their financial statements. And this was clients and auditors. So as you can see, it's really more applicable to large-scale entities. And then the response in here is that the port would work towards that if, you know, you became a much larger organization, maybe in the future, that would be something you would kind of do. And there weren't any compliance or other findings. And that is the last of the bound pages in the report. I also did go over with the audit committee the adjusting entries, which there were 11. We had one over in the past adjustment, and I moved it over to the audited adjustments, and then we had 2 past entries. Your adjusting entries are very typical. There were 11 of them. You know, basically they consist of things like reporting some prepaids and capitalizing some items, reclassifying construction in progress to fixed assets, recording depreciation, disposals. What that means is items that are on your fixed asset schedule that are no longer there, we removed that. I did reclassify the capital contribution on the purchase of the Mitchell Street property, and I accrued the legal fees. So those are your adjusting entries that we proposed and we booked on this audit, and it was agreed to by the audit committee. Past adjustments are things that we found later in the audit. They're very immaterial. You can record them in the current year and it would not have a significant impact. So, any questions so far on what I've covered, or a lot of material? And I do have, when I have a, okay.
How is
So
the grant money addressed in the audit?
the grant money is addressed as a non-operating revenue. This was a kind of a light year as far as the grant revenue. Whenever a project is in place, we make sure that the grant revenue is recorded as a non-operating revenue and as a receivable if it has not come in at the end of the year.
So not as income then?
It is as income, but it's what GASB requires us to record it as what we call below the line income, because that grant revenue typically is used to fund a capital
Specific.
purchase
Okay.
instead of you know, just operations. So
Okay.
this year, your grant revenue was about $58,000 in that. And on that particular page, we combined the all of the capital grants and contributions, and that $450,000 that was a donation from the seller for the property is included in there as well. So that's what makes up the $508,000.
Okay.
We anticipate this year the grant revenues will be substantial.
Yes.
Exactly,
This
yes.
fiscal year. Other question?
Any,
David, you have some comments to make. David is chair of the audit and chaired the meeting that we attended.
Well, we had some discussion, several questions, and as a result of that, we made very minuscule changes to the management's discussion and analysis. We also recommended the one adjusting entry for the professional services to account for them in the year truly that they were due. Other than that, I think that the audit went very well, and Liz was more than cooperative and available to answer at least all my questions. I don't know if anyone else had any unanswered questions, but I think that it was very thorough, and the end result of the audit committee meeting was to recommend approval to the full board.
I noticed that language in the motion before us on the agenda. I think the word approval is not correct. I think state policy has to accept. So I think I would ask, when we get to the resolution, substitute the word accept rather than approve. It's more accurate. Any other questions?
Is the increase in employee payments, is that correlate with more of them working more, or is it just a rate increase, or what?
it would be working more at this last year during the busy months, it was more employees working.
So that's not a bad thing.
No, not necessarily. It's unfortunately that cost increased significantly more so than the revenue increased at that time. So,
But it wasn't because something, I think the retirement went up or their cost of retirement
Well-
was just because they were working more.
exactly, whenever you have somebody working more, everything else, it's a domino effect. And
Right.
your payroll taxes increase, your fringe benefits, and of course, any type of pension-related expense increases as well, so.
The pension is a question I have. The first entry in this particular letter on the 6th, it says workers are not members of the ILA. Beg your pardon?
Temporary workers.
Temporary workers. Is the ILA pension, is that part of our working agreement, our contract with them? Or is it something that they get specifically to each individual, or does it go into a general fund for the pension?
The, to answer that particular question, the pension amounts for those temporary workers go into the normal ILA pension fund, which is a fund, and then, I don't know how they exactly distribute it to their retirees, but.
But it would be a general fund initially.
It would not be kept, it would be kept with the steward of the ILA. Those temporary workers, this is a, item that's a standard practice at ports. I know Zelco had checked with another port and saw that their temporary workers were being, they would withhold dues at that port and also pay the pension amounts for those workers. It's all calculated based on a contract of.
That's, I would imagine that's what it
Right.
is. It's, we're contract obligated, I would imagine.
Right, absolutely.
Okay. Maybe a cost we can't get rid of then.
I would suggest maybe consulting, with like a labor consultant and find out if that's something with the, the temporary workers, if, that's another issue you could address.
I think the chairman's already
Yeah,
checked.
we've already,
We've
we've already. Any other questions? Do you have anything else you have to offer us?
Not unless you want me to, answer any other questions or go over anything else, or?
Everybody satisfied? Well, then, since Liz is here, we might as well move on to that resolution. Which is whatever it is on the agenda item. Yes, it's under line 2, it's resolution 0624-1402, and I would recommend, before we ask for a supporter and seconder, that the word accept be substituted for approve. Move. Second. I don't know if we have to do it by, consensus, anybody, well, maybe we have to.
Just read it with the.
Yeah, motion to approve the recommendation.
There you go.
The audit committee to approve the 2013,
Yeah, read it that way.
2014 audit.
The motion to accept the recommendation of the audit committee is,
Approve.
well, the motion is, doesn't,
Accept the
accept.
recommendation of the audit to approve.
I think, well, substitute the word except for approve and vote on the motion as you see it presented. The motion to accept the recommendation of the audit committee.
And accept the audit.
And accept the audit.
So moved.
Mr. Stevens? Second. Mr. Smith? Any discussion? All in favor?
Aye.
Opposed? Motion carries unanimously. And I'd like to thank Ms. Bush for our work.
Thank you.
Especially for talking with us and making it very clear.
And it seems that we kept you just long enough so that you have
Yes.
one right.
I mean, I remember part, but I mean, I can wait out there if you have any other questions or anything, I think you're all set, so.
We should be all set, right?
Yes.
Okay,
Oh,
great.
wait.
Okay, wonderful.
Thanks
Thank
again,
you.
Liz.
Enjoy your evening.
Thank you.
Thank you.
You're
Thank
going
you.
fast enough, you'll beat the
I am
storm.
going.
Thank you very much.
Thank you.
It's coming out of the west.
I know. Jump in the car.
Every water town?
Well, I'm gonna wait and get gas in Watertown.
Smart.
I think I can,
Make it.
I'm sure I can make it. Thank you.
Have a good evening now.
Thank you very much.
Water
Meeting
flowers.
day.
Okay. Roll back in some balance here. This is, there we go. Now it rolls back in balance.
It's a hard one too.
You're a creature of habit, I can't help it.
Sometimes I am too.
Okay.
Yeah.
Everybody got your glasses with your cups.
They said it was coming. Did you know that?
Yes. That's behind the house, so.
It stormed last night. I'm in my car.
You got rain last night?
Oh, water.
Pretty hard.
Yeah. 3:30, so it's not open.
I not mine.
I don't know if they're not, so we
Anybody wants to invest in that little water? Right over here on 12 seconds.
I didn't get any rain. I got them watered my
He's not got the money to open.
tomato plants about 5 o'clock this morning, it's dry.
Wow.
We didn't get any rain.
Got a lot of rain.
Really?
Yeah. But that means so did Glenn.
Good stuff.
It was
Oh, no, he said
coming
we'll
down
take it
straight,
there.
then it
That's what he
swung,
said.
started coming out of the south,
Yeah,
hit
we
all the
get down
bedroom
south.
windows,
Yeah, the night pole's okay?
Yeah.
right up out of the
I'm in
street.
here thinking.
Gary Village.
You're lucky.
Me either.
At my house, if the storm is bad, the dog wakes me up and I have to hold her paw. Yeah.
My 3 dogs are the same way.
We have 2.
There it is.
What are you doing?
He's doing his internship with the sheriff's department
Yeah, that's the.
for the summer.
PJ.
Maybe my house.
I don't want any fun.
Yeah, he's got 2 more classes in the fall, he's done.
Keeps it easier on the air conditioning. Good for shower.
PJ do PJ board football.
Oh, really?
Yeah, I know. they got it.
Private society.
Shut up.
Oh, maybe. Oh, like that.
Good luck.
He'd probably like that.
I'm trusting, I trust God, I trust everybody, I left my windows
Already
open.
had it once.
Actually, she's getting grand or something.
Okay, gentlemen, I'd like to bring it back to order.
Thanks, Diane, too.
And the motion's in order to approve the consent agenda.
So moved.
Mr. Gillen? Second. Mr. Carroll? Is there any item on the consent agenda? If people want to have any questions, some of them I'd like to defer to Zelko. All in favor of the consent?
How come we haven't paid for Great Lakes Cruising Coalition yet?
I signed a check today.
Okay.
Answer that question.
Check's in the mail, right?
Check's in the mail.
Check's in the mail.
Yeah, assuming it went to the mail after I signed it.
For you to sign.
Okay, all in favor?
Aye.
Opposed? It's unanimous. Consent agenda. This is item 3, reports. This is exhibit D.
Can we, a little bit of the C, discuss some of the recommendations that Bowers and Company made to us? Or should we wait until
So we
Zelko?
should wait for Zelko and discuss it then.
Can we table these recommendations for a month? Can we do it that way?
It'll
or-
have to be dealt with.
We want to approve that.
We accepted the audit, but there are issues that we will definitely want to deal with.
That should be discussed.
Oh, yeah.
Definitely. Okay.
And probably should be discussed.
Sir?
We should probably close the benefits, but some of the issues need to be addressed and be dealt with by the audit committee. And discussed and then brought with some recommendations. And I feel we'll get out of this that
Well, I think this communication, the entire communication should be something that all of us should read over. There are some firm recommendations by the audit committee, or the auditor, and I'm sure the audit committee has weighed these also. And I definitely believe that there's some good recommendations in here regarding how we could function better as a port.
Well, I should tell you that we already have started some of the improvements, and we've listened to our recommendations that have been made to us. We're
Okay.
working on that, and we'll need to discuss, probably we should have a whole meeting, and just discuss some of the issues.
So then it will
How
be
can we improve
addressed.
everything, particularly in the context of the expansion that we're undergoing? We can't continue to do things the same old way, because we aren't acting.
Well, there's a lot of references to how we could treat our employees and what they should be educated with and those types of things. So,
This is a court that's been growing exponentially in the last half dozen years. And as we get better, we find areas we have to get better in.
Absolutely.
And even new areas. So this is really good.
just like building a race car.
Absolutely.
Bullets coming up.
You gotta go faster and faster.
Faster and faster. So this will be addressed then?
Absolutely.
Okay.
Especially since it's gonna give Zelda a chance to come back to prepare some recommendations himself. I know we've already started some, and we'll go where it's going.
Okay.
Okay, report. We're at the Administrative Services Executive Director report, and that is Exhibit D. Exhibit D. Any question about Exhibit D? This is a consolidated report involving both the Executive Director and the Manager of Administrative Services. It's pretty straightforward. I think the graphs that we presented are very interesting. As we, since about 2 months, when shipping started to increase, our operations have increased tremendously in efficiency of the we're unloading stuff faster and more and faster. And that first day that we saw that, the first weekend we saw that, has been repeated 2 or 3 more times since, and it hasn't changed. It's still the best work that's ever been done. We're fine until the power goes off. So, any question on Exhibit D? All right, have a question? We will be having other meetings in July. We might even have more than one meeting in July. Maybe, there's a good one. That's on the news. Okay, I have a report also.
Strikeout.
Oh, yeah.
On the side.
I have something for everybody.
Umbrellas?
Like the grass.
I wasn't anticipating that. I didn't bring a raincoat even. So we're going to pass those around.
Overhead door control to the parking garage.
I have a chairman's report. Actually, Jayco Ethics Officer.
They're all same thing.
Yeah.
Terry, are these all the same packet or?
They're all same thing, right?
They're all the same thing.
Understood.
Just one each, and give it left over. This actually is old business, excuse me, new business. There are no other reports, it turns out another report. Okay, old business, this is new business, this is Jayco handout. Everybody got one? This is brand new stuff. This was an email I received from Jayco, and I will send it to everybody, but it has some attachments. And I've copied the attachments, and I'm not going to spend a lot of time. But this is new Jayco law. It became effective June 18, 2014, and it deals with 3 specific areas. There are new laws that relate to defining what they are and how they're dealt with: honoraria, official activity expense payments, and gifts for public officials. So I'm just going through it just to see what it is. The first page is the specific. This was the law, the link, the first link in the middle of the page. This is a new state law, Part 930 on honoraria. And I've checked some areas, but you've got some points right there. It's a little little checks or underlined, why this applies to us, and what it amounts to, what honorary are called, what is acceptable, what is not acceptable, etc. And then attached to that, or next to the attachment is part 931, that deals with expense payments and service payments. That is what you can expense, get paid for by the court. If you go to a meeting, what expense are you required to give, and what expense will the court cover? So that's section 931. Again, I checked off the definitions, the things that qualify, and how they are dealt with by the court. And then the third of these, longer still, this is the part 933 of this new law that deals with gifts. What are gifts? What are not gifts? What gifts you can accept? What gifts you cannot accept? If you have a question about whether what is being offered to you is an acceptable gift or an unacceptable gift, it's all laid out here perfect. Pages, I think there's 8 or 9 pages. So I'm obligated to share this with you, but I'm obligated by J-code to share this with you. And rather than just send it to you by email, I thought I would at least show you what's here and then send it to you. The next document is also from J-code, and they 2/3 of the way down, I underlined it. Please distribute this handout to your agency's officers and employees. The qualifying ones are all in this room, plus the executive director. And these are just a quick and dirty view of J-Code's guide to the new gift regulations for state officers and employees. This. Okay. And that is a 2-pager. And then attached to that, they didn't send me this, but I got this to you as well and added it. J-Code's guide to new gift regulations for lobbyists and clients of lobbyists, in case anyone who is a client of a lobbyist. What you can do, what you can't do. What the lobbyist can do, what relationship you can have. So that's what this is all about, okay? And I wanted to share that with you. I was asked to share that with you by J-Code. And rather than have you go through another presentation, PowerPoint, it's just easy for you since it's minimal by comparison with that. Other presentation. Yeah, so that constitutes my contribution to new business. J-Code handout, just a quick cover. Any other business? A motion to order to move into executive session for personnel matters. I motion to go into executive session. Mr. Brown?
Second.
Mr. Smith? All in favor of moving into executive session?
Aye.
Opposed? Unanimous, moving into executive session. There will be no business. The motion is in order to resume the regular session.
So moved.
Mr. Carroll, Mr. Smith. All in favor of resuming regular session?
Aye.
Opposed? We are now back in regular session. If any more information needs to come before this body, any more business, motion in order to adjourn.
So moved.
Mr. Gillen.
Second.
Yeah, that's a mistake I did.
Mr. Coates. All in favor?
Aye.
Opposed? We are standing